afternoon. Okay, that sounds better. Welcome. Thank you for joining us today. My name is Hilarie Koplow-McAdams, and I'm a venture partner with NEA. And I'm a board member at Uniphore. And this is Umesh Sachdev, who's the CEO and founder of Uniphore. And we're going to talk a little bit about the category today, why NEA made an investment in Uniphore a year ago, what's happened in the last year. It's been kind of a crazy year. If you heard Michael Milken earlier today, he alluded to some of the changes. And then what does the future of the customer front office look like, starting with the call center? And I think a big sub-theme will be around artificial intelligence. Just a little bit about myself before we go into the main content here. I spent 30 years as an operator in Silicon Valley. I was with Oracle, Intuit, Salesforce, and a company called New Relic in the observability space. And one of the observations I had over the last decade was that the digitization of businesses led to this need to think about the customer experience on the back of those digital experiences. And that's really what led us as a firm, NEA, to look at what do front office operations that are customer-centric really look like? Is there room for innovation? What about the call center experience? I had a call center experience last week when we lost our power for 3 days due to the storms. Yeah, PG&E. This is in Northern California. We had these terrible storms and lost our power, and getting a hold of PG&E in that situation was kind of a difficult experience as a consumer. So I'd say there's a lot of room for innovation in the call center. And so that when we looked at Uniphore a year ago, which is when we made our investment, part of what we were really taken by was the category, the opportunity for growth in the category and innovation in the category, but also that foundational to your model was this idea of applying AI to the call center agent solutions and ultimately, enhancing the consumer experience. Turns out that was a really important strategy. So maybe you can tell the audience a little bit about the company, and then we'll talk about what's happened for you over the last year as CEO of the company.
Yes, thank you, Hilarie, for opening this up. And I'll encourage everyone, it's a smaller crowd. If you want to move front, we can make this a little more intimate. Lots of familiar faces, some new. I've been at Montgomery for the last 4 or 5 years. Marsh Capital is a big shareholder, and now NEA is. Uniphore has been in the conversational AI and data space for the last 15 years. I founded the company in 2008. We've been, for the last many years, focused on developing AI solutions, which really work as co-pilot for employees in many enterprises focused on the customer front office. We started with contact centers and customer support, extended our platform to include use cases around revenue management and sales teams, and really AI becoming a co-pilot, initially to call center agents, then to sellers. And we've been on this journey. We'll continue to expand these use cases because we believe that the customer front office of an enterprise is has been ripe for a disruption with AI. And more recently, ChatGPT brought all this to forefront, and everyone's very interested to move fast and learn more. And it's never been better. So Uniphore, in the last 15 years, we've been fortunate. We got tremendous support from investors, NEA, Marsh Capital. We raised over $600 million of equity capital in our existence. We today serve over 1,500 customers and end users on the platform. We're a global company. We do business in 20 countries around the world. Since this is a closed room and no media, and a lot of friends of Uniphore and investors, we just crossed 100 million of contracted ARR.
Congratulations.
We were slightly behind plan, but still registering about 78% annual year-on-year growth rate on top line.
Amazing.
So no complaints.
Yeah, no complaints at all. Maybe the last year, a little bit of a complaint. In that if you think about your posture scaling up the company, driving to that $100 million goal in the last year and sort of the macroeconomic downturn, maybe you can talk about some of the impact that's had on how you think about running the company during a time like this.
Absolutely. So Hilarie, I sat here probably this very room last year, and it was Sumant, who's my other board member from March. And the theme there was we had just announced our $400 million Series E raise, NEA led it, March had participated. But as soon as we were announcing that raise, the world was already shifting to a different reality. The economic markets had done a completely sharp turn from being rah-rah and high valuations for growth tech companies, led by the Fed's action on increasing interest rates. So we sat here saying, what will Uniphore do? Uniphore is in a very fortunate position last year, having raised such a large round, probably one of the last big rounds before the world completely shifted. We got ourselves a very strong balance sheet, but yet at the same time, we had to make decisions on how will we run the company, how will we navigate. So a few things we did, and I'm glad the board nudged me and the management team. First of all, as we were raising that round, we were on a very high growth curve. We were 90 to 100% growth rate, and we were projecting the same going into this year. And board, and you included, nudged me to take a more prudent approach. So we reduced our forecast. That allowed us to take a very hard look at our cost structures and where was bloat, where was an opportunity to grow, et cetera. So very quickly we had to make an assessment of, okay, well, we've got the leeway from the investors and the board who just came in to revise the forecast. But what is real? Is demand going to hold up? Is the recession around the corner? Are our customers going to face the heat, et cetera? And very quickly we realized that our core business, which is contact center, the most mature business, we started the year with about 60 million of ARR last year. We actually saw demand accelerating, because fundamentally what we do for our customers is use AI and automation as a way of increasing efficiency. And that's given us the 70-80% growth rate this year. We saw that accelerating, but we also saw newer categories. We had started to expand into revenue intelligence, using AI as a co-pilot for sales teams and others, both that our solutions weren't as mature, and those categories found themselves in the discretionary spend area.
Yeah,
so,
surprisingly.
So gave us a chance to really take a very close look with a microscope. We could not take the hammer and say we're cutting down budget by X%, because we had growth, unlike many other businesses. So we took the call that the businesses which aren't going to be ripping in this economy, we still believe fundamentally in the long-term prospects of those use cases, but we're going to give them a longer runway. We're going to slow down the engineering and sales capacity investments that we were beginning to make. But yet at the same time, the contact center business, we had to maintain and nurture those sales capacities and go out to the market aggressively. So we did a balancing of cost, took out expenditure from our originally approved budget, gave ourselves the room. Quarter on quarter, we've seen 25 to 30% quarter on quarter sequential growth this past year. It's been great on the top line. Meanwhile, it also gave us an opportunity. Not everyone came into this environment with the same kind of balance sheet as us.
True.
And as soon as the world turned, valuations turned south, many bankers started to approach us with very interesting acquisition opportunities. And we went into last year having done 4 acquisitions prior. Our playbook for acquiring and integrating was, I'd say, already pretty mature. We were pretty happy with the results we had delivered with the prior acquisitions. So earlier this quarter, we announced 2 new acquisitions. And it just, our organic growth, having taken the prudent approach of where can we save costs, we've done that, invested in growth in core business, and finding opportunistic opportunities on M&A. That's been the playbook in navigating the last year for me.
I mean, there are a lot of lessons learned in that other CEOs could think about. So resource allocation is the number one decision that a CEO makes once you create the strategy. Pulling resources from those strategies that won't prosper in a given economy is a great approach. I think the courageous thing is to think about inorganic growth, right? And what are the right strategic acquisitions to bring into the platform to create a more robust solution for customers. So I give you a lot of credit for having the courage to think it through early in this cycle. I think a lot of people waited, and you were very quick to make that change.
Well, thank you for saying that, Hilarie. One of the things we've given ourselves from a position of strength, obviously the company has many things going for it right now. It's a strong management team. We're in the right place at the right time. Our products are doing well in the market. But we worked hard on creating a very strong board. Your colleague on the board, other board member, John Chambers, his lesson to me is it's where everyone in the world is going to be worried about how do I deal with the economic crisis and what do I do with my cost, et cetera. It's really important as CEO to paint the picture of what you want your company to be on the other side of this. And that has given us the courage and the motivation. But clearly, Hilarie, I also have you on the board. And one of the things I'm always talking to you about is your early days at Salesforce and New Relic. And you've seen this SaaS movie probably a few times over. A lot of us in the SaaS world are seeing this first real tech reset, but you all saw it in 2000, you saw 2008. So are there any lessons learned that you'll talk about?
He's revealing my age through this discussion. I think these economic downturns are actually pretty healthy for companies. They're painful to go through, but it helps you really focus on the mission and what's core to growing the franchise. And I think you talked earlier about you want to bring a product to market that I like to call is oxygen to your customers. Like in a downturn or an upturn, they're not going to turn it off. They're going to come to you for more. Ideally, in a downturn, I actually find that customers are more open to innovation because they have real problems, especially the size of the macro downturns that we're experiencing now and in 2008 and in 2000. It's such a market impact to every industry that people are really searching around in the dark to figure out how to do things better. The call center has always been a cost center, and I think people are now more oriented towards what could be the customer experience that enhances the brand. And I think Forrester does these studies where they show that the person you speak to at a company actually has more of a brand experience impact on you than anything you read about the company. And if you think about your own interactions as a consumer, it's pretty true. And oftentimes the call center agent experience can be frustrating. And I think that we should talk about some of the use cases that you've seen, but let me go back to your question. So in 2008 at Salesforce, we were about $1 billion. I had just joined the company at 500 million, trying to scale the company to double as long as we could. And what we realized was that we had the opportunity to bring a platform to the market versus what we were originally promoting, which is this Salesforce automation in the cloud concept. And I think the same is true for Uniphore. We have a platform of solutions that we can bring to customers so they don't have to buy the point solutions on their own and integrate them and try to come up with a data model or an informative artificial intelligence approach that would work across a bunch of disparate parts. That's one of many lessons. I think the other lesson that we always learn in these downturns is you can do a lot more with less than you think, and that organizations have institutionalized cost structures that they don't need anymore, that they've outgrown. And so it forces everyone to innovate at a company level, but then even within our customers, we see people turning off spend, turning on more strategic spend, and generally being more open-minded and interested in change. So
That's
those
right.
are kind of the key lessons. And it made me think about, when you think about Uniform, there are two kind of stakeholders in the value proposition. One is the company's call center agents, with your kind of core flagship offering that get increased productivity. And then there's also the consumer side. Like, I think as consumers, we sort of like self-service, but we don't like it when it's inconvenient and takes a lot of time out of our day. So maybe you can inspire us all with some of the productivity return on investments you've seen and heard from customers and how that's trickled into the consumer experience.
Absolutely. A couple of things that come to mind. Most of the businesses that we work with are large enterprise in different industries, telecom, banking, financial, hospitality. And if you think about these segments, it's very hard to create a core differentiation in the product, unlike tech. A hospitality business is a hospitality business. Maybe your lobby looks different from another lobby. A telecom company is a telecom company. So the differentiation that these businesses can derive is in customer experience, and which is where using AI, using technology, using tools becomes important. But to your point, in an economy like right now, when the CEO says in a large enterprise to their teams, I want to take out X percentage of cost, people really try to protect sales, they try to protect core engineering. It's in customer support, which is already seen like this cost center.
Right.
Where the first recommendation is made that, hey, let's not hire those open recs or let's reduce costs. But these are also the economic times where consumers are calling these businesses the most. People want cancellations, people want urgent help, people want to refinance their loans. So the traffic in the call centers are going up. There's a motivation on the enterprise to lower headcount and lower cost. And so which is why there's an innate opportunity to move in with AI and automation to fill that gap. We focus on employee experience. So one of our big customers, one of the largest hospitality and gaming companies on the Las Vegas Strip, and we deployed a self-service AI bot for them prior to the economic turn. They had the foresight that they didn't want to set up a large call center. They were already investing in AI. And the definition of being lucky is being prepared and just being, at the time when the opportunity presents itself. So the fact that our solution was already mature, come Super Bowl of this year, we handled over 50% of their contact center traffic through the self-service AI bot. And I can't even imagine if our AI bot wasn't in place, what could have it done to their brand? Because majority of the callers would not have got through to any human being to speak with. So from a productivity standpoint, it's great. Another huge example of
I'm assuming that was gaming more than anything.
It was gaming from a Super Bowl standpoint. This was the gaming part of their business.
Yeah.
But the gaming customers also come and stay in their hotels, etc. Right? So it's the same customer base. Speaking of customer experience and urgency in these economic times, the US Medicare has given out contracts to a lot of their subcontractors to reach out to millions of beneficiaries in the US, in the United States, using AI-assisted Copilot self-service bots. It's very expensive to engage these customers using a large human call center. I mean, you'll need tens of thousands of people in the call center. So there was an urgent RFP through multiple subcontractors of the US Medicaid program, and AI providers were pinged time to value. Once again, the fact that we've been a platform, we've been investing in reducing our time to value through AI, through automation, we were able to stand up a self-service outbound bot, which was able to reach tens of thousands of people in a given day in less than 2 weeks from receiving the contract.
That's amazing.
Allowed us to capture that opportunity. So on the one side, there's employee experience and productivity delivered to businesses. On the other side, it's consumer experiences with someone as large as the US government trying to use AI in a hurry in these times. So we are seeing demand from various different pockets of the economy at the moment.
That's a remarkable set of stories. And it begs the question about how far can we go with AI? So will there be agents in the future? Well, I'll just ask that question. Do you think there'll be call center agents in 10 years?
So, Hilarie, like I said, I founded the company in 2008. In the last 15 years, the number of times the prediction has been made, including by myself, that call center agents will not be around. If I can get $1 each time I said it, I'll be a very rich man. But the truth is, we still are here with 16 million contact center agents. AI is gaining a lot of prominence. AI has become a lot more mature. ChatGPT has got the conversation to the forefront. But I think in our lifetime, I'm very comfortable making this prediction. The biggest role AI will play in these front office categories, whether it's contact center or sales, is going to be as a co-pilot to the executives who work in these businesses. There will be the edge cases of peak traffic in a gaming company, peak traffic in US Medicare, peak traffic in telecom, where self-service bots can take over. But the most complex cases where we as a human species, if I'm stuck on a freeway with my family and my kids in the back seat, but I have a flat tire, I would want an empathetic human voice on the other side. And hopefully there's an AI co-pilot assisting the human being while the human being says, listen, your help has been ordered, a truck is coming to tow you. I'll stay on the call to give you the comfort while you're on the road. In our lifetime, I don't think we're going to see a day where we won't have call center agents. AI will play a huge role as a co-pilot, driving efficiencies up. But I'm not one predicting that call center agents are going away.
I agree with you, and I like to think of it as sort of our digital twin, and I think about like my day-to-day driving experience. I have my Google Maps. I set them up even if I know the route. It's mostly about the timing, right?
Exactly
and
right.
It's just a habit now. And I think most of us will operate in our jobs in a similar fashion of having a digital co-pilot doing some of the work for us. You mentioned ChatGPT a couple times. It's been a remarkable time in the industry to think about the application of where ChatGPT can play a role.
That's right.
You have your own AI models. There's been a lot of training at the industry level so that the call centers that adopt, like the US healthcare example that you gave, go fast. What do you think the impact of ChatGPT will be on Uniphore?
So first, let's quick primer on what ChatGPT is. The analogy I draw is like cryptocurrency became the hype. What people ignored was the innovation behind cryptocurrency was the technology of blockchain.
Right.
Blockchain had many other implications and use cases, and truly speaking, that was the big breakthrough. Cryptocurrency was a use case using blockchain. Similarly, ChatGPT is that end use case that's getting all the media hype right now. The technology innovation is truly generative AI, and it was spoken of
Right.
in the opening session today. Large language models and generative AI have been around since the last 3 or 4 years, and a lot of mature AI companies, including Uniphore, have been working with large language models and generative AI. The difference that OpenAI with ChatGPT has shown us is that you can come out with a pre-trained AI bot, which has been trained with 1.75 billion parameters. Most of the bots that we will deploy for a given customer would be trained on 20 to 50,000 parameters, and then we put it into production for a given use case. This is a massive data set that they've trained on, and which is why they are able to make a bet of we can replace a search engine with this, because that's a universal query system in the English language and as that languages, etc. So the impact of this on Uniphore's business, multiple levels. Technology, we've already been an LLM and generative AI user, gives us inspiration to think about many more use cases. But at the same time, our customers aren't going to be interested in replacing Google search. They're interested in faster time to value contact center solutions for healthcare that can be deployed in 2 weeks from contract and generate millions of calls. So we're going to be a vertically oriented LLM generative AI company. On the marketing side, ChatGPT's advent has been one of the biggest marketing events for us without us having to spend on it. We had a major cybersecurity player, listed company, reach out to us. The CIO, in fact, it was an LP of March Capital, gave us a call. The CIO was looking for a solution. The CEO had gone to his execs and say, I don't want an incremental approach. I want us to reimagine our customer support experience with AI now that I've read about ChatGPT. So we are getting influx of demand generation and lead.
Yeah.
Because of people have read about ChatGPT. They may not want to go to Microsoft and Google to solve their problem. They want to come to specialists in the industry. And it's been a great last few weeks for us.
Yeah, no, I think you make two fantastic points. One, the market's being educated on the capabilities, so people will come in with that foundational knowledge of the world could look different. Maybe a year ago they didn't think their call center or front office experience could look different. The second piece is that there's been a lot of writing of late that the vertical solutions that take advantage of generative AI capabilities will actually be the big winners because they offer a holistic solution. It's not a build. Infrastructure plays, I'm very excited about what Microsoft and Google have announced. Those are fantastic plays, but the vertically oriented companies with a whole holistic solution, I think, will be the winner. So we hope we'll be the winner.
Well, we're certainly seeing that, Hilarie. So, let's summarize the few things that you and I have discussed today. The fact that we are in an industry where AI and automation is actually helping businesses navigate this tough economic climate gives us a huge demand in front of us. We are a platform play, and the fortunate thing is we've been investing on the platform ahead of this economic situation changing. Had we not done it, we would not be in a position to offer multiple use cases to our customers. And also this whole advent of LLMs, one of the important things that people ignore is it takes a certain amount of investment to build a modern day AI company with generative AI. The fact that we raised $400 million last March, that balance sheet, the fact that we are a platform play, 1,500 customers and end users around the world, scale of 100 million ARR, and doubling ourselves from here, just puts us in a position, I believe, I'm very optimistic about the next 12 to 15 months of this company. And I'm grateful for NEA support and March Capital's support and all the LPs. And hopefully we'll be back here next year talking about how do we go from there to preparing for an IPO.
Let's make that happen. It's been a wonderful partnership. Thank you.
Hilarie, thank you very
Umesh.
much.
Thank you, everyone.